This is Surya. Welcome to Market Insights by J2 Wealth. Today we have Mr. Gaurav Misra. Mr. Gaurav Misra is the current equity fund manager at Mirae Asset Investment Managers Private Limited. Mr. Misra has over 26 years of experience in investment management and equity research functions. He currently runs 2 investment schemes under him. Mr. Gaurav Misra currently manages AUM of rupees 43,055 crores. What is your perspective on the current market with all the news about the Red Sea attacks and the upcoming general elections?
We have a constructive view on the markets, but with a horizon of at least 3 years plus. In the recent times, the markets have been pretty strong and valuations are slightly ahead of long period averages across many cohorts of the market. So I would expect that market should consolidate, but it's possible that given the current momentum, they can even go higher. But over longer periods, we remain constructive. We think investors should be looking at this asset class with a longer horizon and try to benefit from the power of compounding. Events such as Red Sea, are not too significant. Frankly, the countries involved do not, have not impacted commodity prices, and we don't see that, either going forward either.
Thank you, sir. Do you think your focus funds has performed relatively low when compared to its peers?
When we look at the fund, we urge investors to be looking at long period performances. So over longer periods of, say, since inception of 5 years and all, the performance is satisfactory, falling in the better quartile. However, in the recent times, surely the fund performance has not been as satisfactory. But we know that the holdings we have are very strong franchises, strong business models. They have been doing reasonably well in the marketplace, but in the nature of the rally we are in, there are certain parts of the market which have done even better, and therefore there is that relative performance. But I think over long periods of time, our philosophy of picking quality growth stocks at reasonable price and having positions which are also in deep value, special situation or cyclical sectors together, work out well and will give satisfactory returns for investors.
That's great, sir. Sir, do you think this year would be year of large caps since there is overvaluation in small and mid caps?
Again, I would say that we should be looking at investments with a slightly longer horizon, and frankly the India story is very promising over the next not just 1 year but 3-5 years, and so returns from each of these cohorts will really depend on how the stocks are picked from each of them. But yes, at an aggregate and with a shorter duration of 1 year, it's difficult to say, but given the slightly higher overvalued nature of the small cap and mid cap versus large, ideally there should be some consolidation in the small and mid, but short term difficult to say which way the momentum will be, as far as the market's concerned. As they say, in the short term the markets are voting machines determined more by emotions, greed, fear and flows, but in the long term it's really a weighing machine where the merit of the businesses are rewarded.
The hot news right now in Mirae is the launch of your new fund, Mirae Multi-Asset Fund. So why do you think this would be the right time for the NFO?
Sure. For us, we have been widening our offerings for the market, and in particular, it just so happens that the timing of this product to me is very relevant for investors and advisors, simply because, as to your earlier question, the markets have done very well in recent times. Maybe they're overvalued. So in context of that, along with possible volatility coming from emerging from global cues, for instance, the Western world might see slow down in the months or quarters ahead. All of that put together could cause greater volatility in the markets, and that's where a fund which allocates between different asset classes, gold, debt, of course, arbitrage, equity, even real estate investment trusts and foreign equity, gives an investor the sort of ability to ride through very strong downtakes, protect his downside, and eventually over the medium term the returns will be just as satisfactory with lesser volatility. This is as per our models we have. Right now, of course, our models which we are going to be using for this fund are suggesting that we will be between that 50-55% exposure to net equity, and the rest will be through these other assets we are talking about. And these other assets, debt, gold, are actually have negative correlation with equity. So especially if there's going to be volatility, given where we are, a fund like this will be appropriate. And lastly, many investors and advisors don't really have the time on a more regular basis to be toggling between different asset classes. This fund, on the basis of the model we have created, will do that on an automatic, ongoing basis.
Be the investment style and pattern of this NFO.
As I was saying, it's a bit rule-based. The value of or the percentage of equity allocation will be determined by our models. And the range for equity, net equity, will be between 40 to 75. Of course, we'll have gross equity exposure at any time of up to at least 65 because it's an equity-linked product. And the rest, our teams in the gold ETF. In the debt teams will be telling us, what is the range. Right now we're looking at being between 10 to 15% in gold. That's the range anyway for the product, but more towards 15 at this point of time. And, debt the remaining. Within equities, it will be run more like a flexi cap offering. And right now there's greater comfort in the large cap. So we'll have a large cap bias at this point of time. Of course, this will change depending on what value, what opportunities the market throws up. And of course, being small at this stage, as it's it's just going to be launched, so the fund manager will have flexibility to be looking at even smaller firms within the small cap and the small mid cap.
Right, sir. Finally, what would be the ideal investment option at this time, whether it's lump sum or SIP?
Sure. I mean, for existing for investors who are already present in equity, and even those who might be a bit under allocated, an SIP anyway makes sense, because this is precisely the kind of product which will average out the levels of the market, and within that also try to take advantage. If the markets were to correct, the exposure to equity will get higher on those kind of low days. So it's always relevant to take an exposure anyway through SIP, especially when an investor does not have current exposures to debt, gold, or doesn't have the wherewithal and the time to be toggling between the three. So all that will be taken care of through a product like this and through SIP route for a longer horizon. For those who are under allocated or to equity per se, or who might have have slightly overweight stance right now, courtesy the run up in the markets, maybe through the small and mid cap, I think these are times to be maybe adjusting a bit, and to get to that optimal level of allocation. A product like this will be relevant because that downside volatility will be protected, and because again there'll be decisions involved of getting out, getting in, which the product will do, which the client can leave to the product to be done. So I think it's definitely relevant for SIP, but also for lump sum, where there is a case of overweights in existing, where it's time to take weights off and put it in a more diversified asset allocation product, or where one is trying to slowly build up exposures, but markets could be volatile, so build it up through a lump sum manner.
Jilani sir, I mean, what do you think? What is your perspective on this multi-asset NFO, sir?
See, at present market condition, since now 70,000 Sensex level, maybe the purpose, the investor who looking little of safety kind of thing, okay, this multi-asset is really a good option, since it has all the assets included here, and the probability of risk is very, very less as compared to pure equity. Okay, so yes, as he said, okay, there are other multi-caps like ICICI and Nippon has done phenomenally well. Okay, for those conservative kind of investors, this is the best option to opt for it at present condition.
Thank you, sir. Thank you so much for joining us today. The interview was very informative, sir, and thank you for your precious times.
Thank you.